So if you look at, this is a screenshot from my October clients meeting. By the way, every month I hold a clients webinar for updates of the markets. And you can see that, I don't know whether you can see the years, okay? This is starting in 2011, okay? Because I was, as an advisor, I experienced the whole previous cycle and how people were so excited about the gold. That time ago was 2000, and I still remember Standard Chartered have a prediction to say the gold will go to 4,000, which is true lah, turned out to be true, but that was after 14 years, right? And there was a huge crash about gold for a very long period of time, almost 9 years it takes for the gold to recover to the previous level. Yeah. So what I'm trying to say is that when we look at investment, gold as an investment, okay, put aside the utilities or enjoyment that you have to touching the shiny material, right? And you really need to look at the market cycles. And when you do that, right, it becomes same as you are investing in stocks and bonds, same as you are investing in property, same as you are investing in REITs. And you need to know what you are getting into. Because sometimes, even if the market is very good, if you buy the wrong instruments, you also can lose money, right? So if for people who know during the era, we have this thing in Singapore called the Geneva Gold. How many of you know about Geneva Gold? Tap into the chat box. Tap Geneva, right? Or you heard of this thing called the gold guarantees during that time. By the way, it was in the 2011 and the 2012 era. Okay, tap into the chat box. Jason say you buy physical gold, then put at home, keep the next time how to sell. Got design pattern and no design, what's the difference? Yeah. So you see, but there are people who are really interested in buying a gold bar with totally no design and just buy at home. That's why this Geneva Gold have a big business at the time. And I think now you know about Geneva Gold at all. Okay. So you see, it's very important to learn history. So at the time that this company called Geneva Gold, and there are similar copycats. The other one is called Gold Guarantee. I can't remember the third company's name. And they were selling gold. They are actually a goldsmith, but they were selling gold. But very interestingly is that they actually give you a guarantee return. So they are actually promising you a 2% per month return for gold. So that means if you buy a gold from them, they guarantee you to make 2% per month. That means how much is the annual return? It's 24% per year, correct? So that is actually, this year, of course, gold also rally 50%. So in the year of where gold can rally 50%, promising you 25% is not issue, right? They actually can pay you back. But this kind of thing, is not sustainable. And we also see the chart that just now the gold price corrected after that. And that's a time that they cannot sustain the scheme. And they are using the new people's money. That means the new people who join the scheme and pay to the previous owner of the gold. So you see, even if people are genuinely want to buy a gold bar, they fall into called some sort of a Ponzi scheme at the time. And there are a lot of people lost money from this whole gold buyback scheme. By the way, it's not a one company. It's actually quite a few companies who are doing that, and it's quite a lot of Singaporeans Singaporeans and Malaysians also join these kind of schemes before, right? So the instruments you use to buy the gold or any investment instruments is also very important. Okay, so let me just take a step back. What really moves the gold? Of course, we know gold as a so-called a safe haven in people's mind. When the stock market corrected, people want to buy gold. When there's a geopolitical tension, people want to buy gold. Especially now, I think the biggest driver is about the US because people actually literally losing their faith in the dollar system. But really, they have no choice. So gold is one of the way they try to escape. But you also need to understand that I mentioned that to my clients as well. If you are the US government and you depend on the dollar domination to control the world, you do not want the gold to run too fast, right? Because if the gold run too fast, then people do not want your dollar, then you have an issue. So if you study what happened in 2011, that time actually there's a rumors about how the US big banks were trying to use the gold future to crash the gold, right? Just now we see the gold price crash, right? And that is how they manipulate the gold market. And some people say the silver market was even more manipulated. But of course, all these things is a rumor. Yeah. So in today's context, also the same. You see, when the gold rally so much, when all the banks say that the gold will rally to 5,000, 6,000, that exactly the same pattern start to repeat. We see a sudden gold price crash in 10% in a day. Yeah. So this kind of thing that we really need to pay attention as a gold investor. And of course, central banks, they are buying gold like China, Russia. They are trying to get out of the dollar system. And I believe Singapore also should have bought a lot of gold as well. Uh, this is just like everybody's common strategies they have to use. So my point is here. So instead of asking, should I buy gold now? It's not a yes or no question. As any investment assets, you should look at the gold investment as a portfolio point of view. That means you look at your whole entire financial portfolios. You look at the stocks you have, the property you have, and any other financial assets you have. Where does the gold fit into your portfolios? And if you think there's a position for it, you know, which instruments is the best way uh, to implement your strategies. The thing is that when people get it wrong when they uh, decided to buy gold, right? So then, people start to sell that stock. Okay, people start to sell their stock to buy gold, you know, and sometimes they buy the wrong instruments also, like what I mentioned, Geneva gold just now, but that was a bit extreme. But sometimes you buy gold bars, all these things. Um, uh, we don't talk about the quality. Of course, if you buy from the bank, it's okay. If you buy from the goldsmith, sometimes you don't know whether it's correct or not, it's a real or not. And how pure it is, you're also not so sure how to store it. And also that I think one of the participants also mentioned about liquidities. So, if you really want to sell it today, how much is spread lah? So for those people who have ever transacted gold before, there's a middleman, right, to transact your gold. And there's a cost involved because people don't work for you for free. And the cost can be quite hefty as well, right? And how do you store your gold bar in your house? How much? Sometimes some people have quite a lot of gold and they don't have stocks. Yeah, so it's always a balance. The reality is that I want to do this educational webinar, let you understand uh, gold is not really a safe asset. It's not a safe asset. It's an asset which can make money for you, which can play an important hedging position for you, but gold is not a safe asset. Why do I say so? If you look at the chart, this is a gold chart, right? During the global financial crisis, okay? If people think about gold is safe, that means during the global financial crisis, uh, gold price should not drop. But if you look at the gold price during the global financial crisis, they actually dropped 25%, which is not much less than what the S&P 500 have dropped, right? S&P 100 dropped about 40% at the time. So if you think about in this manner, you want to take it as a very safe asset to own. And in the time of a market crash, they may not work the way that you hope it can deliver. And if we look at another scenario, this is during recent after COVID. So after COVID, of course, gold price rally a little bit, but also you see it's the same pattern. So people actually buy out all the gold price in anticipation of the crisis. But when the crisis happens, actually the gold does not necessarily serve the same purpose. But of course, that doesn't mean that it's not a good investment because ultimately all they come back. So when you buy gold at this price, if you sell the gold now, you make a few fold, right? At this level, it's only like a $700 per ounce. At this level, it's only $1,700 per ounce. But you need to be very clear about do you have the right mentality when you invest such a thing. Yeah. And if you invest in gold bar, it's very difficult, right? You cannot split the gold bar into two, say, and sell half, which you can, lah. But then it's really not the same thing. Okay, so for people who follow me for long, I use this Quilates portfolio to look at investment and the retirement. It's really that we need to have a guarantee variable and a bonus layer of all your financial assets. And to me, gold can never be in the guarantee layer, but I'm willing to put them under a variable layer or bonus layer. Either I use it as a hedging of my portfolio, or I use it as speculation. So I sometimes do a bit of speculation investments for gold as well. So they can help you to reduce your volatilities, can hedge your dollar exposure if you have a lot of US assets, and also that you can diversify your portfolios. But definitely, I believe no matter what you do, you need to really use it as a part of your portfolio. It should never replace your equity and bonds. And you also understand that if you're retirees, gold does not generate income. And when you start to transact gold, there's a lot of costs involved. Yeah. And you not necessarily have long enough time to wait if there's a correction. So all these are the considerations when you do gold investing. Okay. So how can you buy gold in today? Um, we don't talk about the financial instruments, but we're just talking about a simple concept about buy and hold a gold. Basically, you can buy a physical gold, right? And UOB have a gold savings account. Literally, your statement, I understand is that your statement will be show how many gram of gold you have. And you can buy gold ETF in the US markets. And you can also buy gold bullion funds, which is we'll share with you later. And you can buy gold mining stocks. This is a little bit more speculative, which sometimes I advise some of my clients to do it. It's a leverage play for the gold price as well. And if you are DIY traders, you can also consider to do forex trading. Of course, gold have a lot of derivatives. You can do future, you can do options, all these things. Okay, but that's always a challenge because when we're talking about using gold as a portfolio strategy, okay, because when you're looking back at all these instruments, they are for a one-way street journey to play with gold. It's a one-way goal, and you are assuming that you have these assets and you don't touch it, right? That is some kind of except the trading part. But most of the time, this is become a long-term assets. And if you are so unfortunate that you actually buy the gold, that the previous cycle, 9 years for you to recover, they can be quite difficult period for you. So the thing we need from a portfolio management point of view, okay, let's say if we buy a physical gold, right? As I mentioned a few times already, it's high cost, it's illiquid. And if you buy a US ETF, of course, GLD or IAU, all this, you can buy, no issue. But because we are Singapore investors, we need to convert our money to US dollar first. And by converting the money, you already start to lose money. If you convert with the bank, you probably lose 1% already. And when you buy the gold, you also don't forget that you're subject to, if you buy a US asset, you're subject to ST duty, stuff like that, right? So that's what I call the jurisdiction risk. And also, really, people do not know the thing they bought, whether a lot of people questioning that the gold is it really in the US vault or not. There's a lot of mistrust about that as well. So I mentioned about ST duty. And if you buy really gold mining stocks, if you buy like Newmont, you buy Barrick Gold, all these, uh, it's not entirely a gold exposure because when the stock market crash, you are buying a stock, right? So the stock will come down as well. And sometimes it just doesn't align. Sometimes gold price is doing very well, like beginning of the year, this gold miner stocks just does not move at all. So there are many factors to use gold miner stocks as a gold exposure, which I try to use that for my clients' portfolio in the past. But it's very challenging because I need to be very perfect about the entry and exit points. Yeah. So for a plain vanilla gold exposure, we really need a simpler way to do it. Okay, that is I have been always been hoping for many years. Yeah, because we want a simple exposure to gold. We want our investment is safe, not subject to some unknown custodian issues or counterparty risk as well. Then we want our investment to be liquid. When I say liquid, it doesn't mean just buy and sell, because I want these particular asset classes. Let's say I buy a gold, I want to be able to sell a portion of it. I want to be able to increase a portion of it. So maybe let's say today I buy 10%, tomorrow I buy another 20%. So through that I can dollar cost average the price. And when I sell, right, I can also dollar cost the price. So the liquidity, this is what I'm looking for. And also, I want to be able to buy gold in HGD, which doesn't really exist in the past. And I probably also want to have a HGD hedged version, because if I use dollar to buy, although my gold price go up, but my dollar depreciates, also it doesn't make sense for a Singapore investor. So I want to have a Sing dollar hedged version to buy gold. And the last but not least, I don't want to have any storage headache. I want to be happily with my holiday, not like a fire. I have to buy a fireproof safe to protect my gold as well. So until now, luckily we have a new fund. Finally, in Singapore, Lion Global launched their first physical gold fund, and voted in Singapore. That is the key. Later they will explain to you what does that really mean to you. And this one is just I believe just launched last week, and by now you should be able to buy this fund already, right? So today we have the honor to have the Nicholas, the Director of Distribution in Business in Lion Global Investors. Yeah, Lion Global, if you have invested in funds, you're probably familiar with them. And they launched quite a lot of innovative funds before, like Lion Philippe, Singapore Race, and some other famous fund like Lion Global Short Duration Bond Funds, all those things. So I'm actually quite happy that they have these solutions finally for Singaporeans, right? So the next session, I will like Nicholas to explain to you in more details about how this fund works, and you can see how they check all the boxes that I was talking about for a Singaporean to invest in gold. Okay, so without further ado, can you please put an emoji into the chat box? Let's have a welcome for Nicholas to give us his presentation. Okay, so back to you, Nicholas.
Thank you, Ivan. Thank you so much for that, and thank you for all the emojis that are coming in. I'm going to just share my slide very quickly. Let's make sure that everyone can see slides that we've prepared for today's presentation. And if you can't see it, just let me know that you can't see it. Ladies and gentlemen, my name is Nick from Lion Global Investors. Thank you so much for the warm welcome, and thank you, Ivan, for inviting me here today. What I'm going to share in the next 20 or 40 minutes or so is a little bit about how we view gold and what we've been doing to try and provide an easy way for investors in Singapore and outside of Singapore to access gold. And gold, being a trusted asset, deserves to have a trusted home, and we also want to be that trusted partner for people to access their gold investment. And I realize that saying that, not everybody knows who Lion Global Investors is. Sometimes when I say Lion Global Investors, they think that a toothpaste company has set up an asset management firm. Lion Global, for those of you who don't know, is the asset management arm of OCBC Group. We manage in excess of 78 billion Sing dollars worth of assets. So to put that in context, we are not quite as big as BlackRock. However, we are certainly not considered a new SME kind of fund manager. So we've been around for a while, since 1986 when we were first founded, and we are owned 70% by Great Eastern, 30% by a holding company by OCBC. In other words, we are an OCBC company through and through. And we've been recognized quite consistently for some of the products that we've been launching. And I won't go through the entire list of awards here. That's not the purpose of today's presentation, but I will just highlight that there's no award for being a member of the OCBC group of companies. All these awards recognize either excellence in terms of our firm's capabilities or excellence in terms of our product's capabilities. So with that said, let's jump into this Lion Global Singapore Physical Gold Fund. And I'm not here to sell you anything, and don't make any uninformed decisions based on what I'm going to say. All I want to invite you to do is to have 3 questions. Hold these 3 questions in your head, and as I present, see if you can tease together some of these answers to these questions. The first question is, why should I invest in gold? Why do I want to put my trust in this shiny metal that has been around for such a long time? And secondly, why is now a sensible time for investment in gold? And we know that there's a lot happening in the world, and we know that gold prices are trading at fairly high levels. Last I checked, is hovering around the $4,200 US dollar per ounce mark. And thirdly, why Lion Global Singapore Physical Gold Fund? There are options out there. We've talked about UOB. You could queue up for heaven knows how many hours and get to the front of the queue, discover that the gold bar that you wanted to buy is not longer in stock because everybody in front of you has bought their gold. So why does a unit trust structure or a fund structure make sense for accessing gold? And we'll go into all of that a little bit, but first a little bit of history about gold. And gold has been around for more than 5,000 years. This means that gold is older than many of the world's religions today, many of the world's governments today, and many of the world's societies today. And everyone, whether it's Confucius or Cristiano Ronaldo, they've recognized the value of gold as a trusted store of wealth. And more recently, if you look at the 1925s, in the past century, for a large part of recorded history, gold was treated as though it was money. The chart here will show that in the grey area, since 1925, throughout all these periods, this grey area here, when gold was treated as money, this was when gold was the gold standard. And they called gold as good as money because back then, a British pound or a US dollar or a Canadian loonie was exchangeable for a unit of gold. And during this time, governments of the time were, once in a while, they did take control of other people's gold. The grey boxes above show historical incidences where the Bank of England stopped people's ability to convert their British pounds into gold. The US would acquire, by rule of law, the privately owned gold at a fixed price, and in exchange they'll give you credits, government credits. Even in Canada, they would take control of the gold at the prevailing gold price. So it's not as though they confiscated the gold and you get nothing in return. They took the gold and they gave you IOUs, essentially, whether it's government bonds, credits, or so on and so forth. Until the 1970s, when in 1971 the US decided to do away with gold altogether and suspend the convertibility of the US dollar to gold, and that sparked the start of the end of gold as money and the start of gold as a commodity. And since then, in the yellow box, you will see when gold was able to trade freely relative to the US dollar, this is what the gold price has done. It's moved up and up, and even though there have been 2 fairly severe periods of crises, the instances of governments taking control of gold have been far less so than in the past. In Singapore, when Singapore was first allowed, Singapore residents were first allowed to trade gold freely in 1973, there has been no historical incident of Singapore as a government taking control of anybody's gold. And I would argue, given our financial hub status, it is certainly not in Singapore's interest to ever consider such a move. What this also tells us is that relative to history, the age that we live in today is relatively safer compared to the age prior to 1971 for people who are interested in owning gold. So now, you're in a jurisdiction which has no history of nationalizing or taking control of gold. You are in an era where gold is freely traded throughout the entire world, and for that reason it's interesting to see how much gold has been in demand. And this is another reason why investors, whether individuals or institutions or individuals nowadays, have been looking at gold, is because when gold starts to run, it can run very hard. What this chart shows is historically, since the 1970s, when gold was allowed to trade freely, how hard gold has run and how hard gold can correct. Well, let's look at the yellow parts first. From 1971 to 1974, the end of the Bretton Woods system, the end of the gold standard, you saw gold appreciate about 340%. From 1970s and 1980s, when there was an inflationary shock and when there was a little bit of an oil crisis, gold rallied almost 500%. And in 1999, since the tech bubble and the rolling series of crises that followed that, gold has rallied actually 600%. So even today, in the more recent rally that started in 2015, when the first trade war that was initiated by, at the time, President Donald Trump, happened, gold has actually rallied only, quote-unquote, 230%. And we say only because relative to history, what this suggests is that this rally is maybe about halfway done. And I think Ivan has made an excellent point, saying that gold is not a safe asset. Certainly not, and no one is going to find it easy to make that argument, because look at what gold does when it corrects. If you look at the period from 1975, in a space of 1 year, it corrected 45%. You know, when the uncertainty passes, that's when gold tends to correct. And there's a long period of 20 years, from 1980 to 1999, almost 20 years, where gold essentially did nothing but decline, run up a little bit, decline some more, and carry on declining until it declined almost 60% from peak to trough. This long period of flat declining gold prices coincided with two factors. The first was, in the previous run-up, supply of gold actually ramped up, and this is natural. This is just demand and supply, and supply came in to match the demand, and unfortunately, due to the bullwhip effect, sometimes when demand goes away, supply is just starting to pick up, and then you end up in an oversupply situation. Left alone, these oversupply situations tend to resolve themselves through price equilibrium. Unfortunately, what was also happening was the coordinated efforts of central banks across the world trying to label gold as a quote-unquote barbarous relic. And if you Google that term, this period of history will come up when the world central banks were actually reducing their hold of gold in their reserves, and that led to this prolonged period where gold did nothing. And if you had invested, say, at the start of 1980, it was a very, very long and hard road before gold started to spark up a rally, and it was only when the crisis of 2000 happened that gold really started to rally in earnest. And so for that reason, we see that gold is certainly not a safe asset. However, there are some interesting characteristics about gold that in recent times have led central banks, the biggest holder of capital in par none in the world, central banks have all been increasing their demand for gold. And this chart here shows the demand for gold in tons. It's important to measure demand in tons, because when you measure in US dollars, you have that combination of price appreciation, but what we want to see is the actual increase in the mass of gold held by central banks. And true enough, this data is compiled by the World Gold Council. It shows that in 2022 onwards, the demand for gold has been consistently high into 2024, and in 2025 that continues to be the case. The reasons why central banks across the world have been buying gold is listed below, and one of those good reasons is that it is an effective portfolio diversifier, which is our next point. And this study was done once again by the World Gold Council. But if you look at the Bloomberg data, you will see that across all these portfolios that have no allocation to gold, it returns around this level, right? The y-axis is the return, the x-axis is the risk. What you want is higher return and lower risk. What the data shows is if you introduce a 5% allocation to gold, all these potential portfolios exhibit higher return and less risk. And the series of these portfolios is illustrated by this yellow line here, and you see the entire curve shifts upwards and to the left. And that tells you that you get both a better return and less risk. And that is why gold is seen as a very efficient diversifier. The actual numbers are shown in the table below, whether it is 3 years, 5 years, 10 years, or even 20 years. The pattern is very consistent that annualized returns tends to be higher with gold, and annualized volatility, in other words the risk, tends to be lower with gold. And for that reason, gold is a very, very interesting diversifier from an overall portfolio perspective. And in this current environment that we're in, when your S&P 500 is trading well north of $6,000, right? Nobody is going to be able to make the argument that equities are cheap, right? I don't think any market watcher of any repute has said that equities are trading at attractive valuations. In fact, I think globally everybody recognizes that certainly US stocks and global stocks in general are trading at expensive valuations. And what this chart shows is that if you look at the history of valuations across the world, the gray line here ranks the price to book ratios of global equities all the way from its lowest point to its highest point at about 3.5 times, and the subsequent 12-month return of gold from this point of valuation onward. So if you look at this chart, it shows you that these yellow bars show you the subsequent 12-month return of gold versus the price to book valuations when you rank them from low to high. And when valuations are high, your allocation to gold tends to be more consistently positive, as you can see from the data here, in the region of around 30 or 40% returns over the next 12 months. On the other hand, when the valuations of global equities is low, the subsequent 12-month return of gold tends to be a bit more mixed. Sometimes it's high, sometimes it's low. And what that suggests is that in times of high equity valuations, these are interesting times to consider an allocation to gold because of the diversification benefit that we showed previously. And the thing about high valuations and equities trading at high valuations is equities at high valuations tend to correct sharply. It can be triggered by any number of events. In this chart that spans approximately a quarter of a century, we've seen at least 10 instances where equities have sold off significantly. Once again, using global equities as our reference here, in the early 2000s, it was a dot-com recession. Equities tanked about 46%. The GFC, when I first joined the industry, I had the wonderful privilege of watching a global financial crisis unfold and set through approximately a 50% drawdown in the equity portfolio. And subsequently there were other crises as well. And in each of these 10 crises, gold has actually outperformed. And that adds to gold's safe haven status. In 10 out of 10, gold has done better when equities have declined sharply. In 9 out of these 10 times, gold has delivered a positive return when equities have corrected sharply. And in one of those, in 2022, when you had a trilogy of 5% rate hikes, you had Russia invading Ukraine, you had China's property crisis, all these three conspired together and contributed to declines not just across equities but across bonds. And even gold was not spared, but gold pulled ahead by declining less than both equities and bonds. So for this reason, gold exhibits its wonderful capability to weather crises and continue to shine even when equities and bonds have lost their luster. For that reason, we see governments across the world buying gold. We see global gold reserves, the chart on the left, increase in terms of tonnage over since 2022. It has been very clear that this trend continues to rise and rise. And this trend is not one that is just isolated to the rich countries like US and Europe, the rich nations like US and Europe, but it's also very clear across your emerging market economies like Russia, that has been increasing its gold over the past 5 years, like China, which has been well publicized to be increasing its gold over the past 5 years. Places like India, historically big buyers of gold, big demand for gold, whether it is in jewelry, but recently central banks, government buying has been boosting its holdings in its reserves. Even developed markets like Japan have also been increasing gold. Singapore also has been in the news for increasing gold, and it is a global trend. And what is driving this global trend is the other global phenomenon where governments and sovereigns are looking to diversify away from US dollar assets. Whether you're talking about US treasuries, globally, the holdings in US dollar FX reserves has been declining. The grey line here shows that in 2000, US dollar denominated assets made up about 70% of global FX reserves. And by 2024, this had declined to below 60%, hovering at around 59%. This data is only available annually, but certainly it seems that if you take the hold of gold in reserves, this trend shows very clearly that gold has continued to increase in its reserves globally. Now, it poses a very interesting question, and maybe a slightly uncomfortable question to the world. What happens when the reserve currency of the world, the US dollar, is no longer 50%, it becomes 50% or less of the world's reserves? In other words, it is no longer the biggest pie of the world's reserves. What kind of reserve currency do we have then? And for that reason, I think it is likely a contributing factor for gold to be a bigger and bigger part of global sovereign reserves, while US dollar denominated assets, whether it's US treasuries, becomes a smaller and smaller part of people's reserves. And there are good fundamental reasons for this. The big reason is really that there are approximately 38 trillion little reasons and counting why the US deficit continues to rise and rise. And rising deficits create a lot of tensions in the bond market. It increases the risk premium, or the yield that investors will receive if they were to choose to buy US treasuries. And it also calls the question whether the US balance sheet is of sufficient strength to sustain these treasury payouts. So for that reason, globally, you do see this trend continue to take hold. And the chart on the left shows that if you look at the dollar versus a basket of currencies, the grey line here shows that this has been pretty stable. It has gone nowhere. In other words, the value of the dollar has pretty much gone up and down and not really appreciated against other global currencies. Whereas gold price, as illustrated in this yellow line, has continued to rise and rise to about $4,000, north of $4,000 in this year and last. If you flip this relationship around, this measures the amount of US dollars it takes to buy an ounce of gold. But if you flip it upside down, it will tell you, like the chart on the right shows, how much gold it takes to buy a US dollar. And the relationship is inverse, and you can see that the amount of gold it takes to buy a US dollar has been declining over time as the price of gold in US dollar has appreciated over time. And what this means is that the purchasing power of the US dollar, if you measure it in gold terms, has been decreasing over time. This presents a difficult conversation for a lot of individuals because so much of the world takes the US dollar as a reserve currency, whether you are based in the United States, whether you're based in Europe, whether you're based in Australia, you will find that the value of your currency, when measured in gold terms, has been decreasing. And if you look into Asia, the pattern is pretty consistent. Whether you're based in Japan, whether you're based in China, where you have the renminbi, or whether you're based in Singapore, where you have the Sing dollar, when measured in gold terms, all of these currencies have been decreasing in value relative to gold. And it creates a real question mark for investors, whether institutions or individuals that are looking to pass wealth or preserve wealth for future generations. How do you want to hold your wealth? What kind of assets do you choose to hold your wealth when any asset that is denominated in fiat currency, whether it's Sing dollars, US dollars, renminbi, Japanese yen, or euros, is depreciating over time relative to gold? And what sort of assets would you hold that can better preserve that wealth? And the answer broadly seems to be real assets, which can include stuff like land, property, commodities to a certain extent, and certainly gold falls within that category. And if you think about it, land, commodities, gold, these are all assets that do not generate cash flow. Yep, so these are very different from your traditional assets like equities, which represent where people are buying for the future earnings of the companies, or bonds, where people buy these bonds because of the fixed income that it generates on a periodic basis. So this class of real assets, the value of which is really driven by demand and supply, and we think for this reason gold needs to play a role in many people's portfolios, not just because it is a safe haven asset, not just because it is an excellent diversifier, also because the value of a portfolio that is denominated in all these fiat currencies needs to have an element of protection and an element of real value appreciation to better weather the uncertainties that are being thrown at us today. It is with that in mind that we tried to create something close to or approximating a more ideal solution. And let's face it, there are ways for investors in Singapore to get access to gold. They can buy gold bullion. UOB is a well-known place for people to buy gold bullion. The trouble with that is logistically it can be a little bit difficult for you to queue up for hours just to get to the front of the queue, pick up the gold, put it in your pocket, risk bumping your gold against something hard on the way out, and then have to suffer the damage to that piece of gold. Because when UOB sells it to you, I don't know if you know this, but what they do is they put it in a plastic bag. Effectively a plastic bag, and if you were to drop it on the floor, it doesn't take a lot of force to damage your gold, and if you damage your gold, then when you try and sell it back to UOB, well, it's not insured against that kind of loss, and if you try to buy insurance, it can be expensive. You can buy it through ETF, and heaven knows there's a lot of ETFs out there, and one of the biggest ETFs out there is State Street Spider Gold, which is also listed on the SGX. Where we thought a more ideal solution should be is that you should know where your gold is, and State Street custodizes their gold in the US and in the UK, and if the day comes where you need to bring your gold back, well, I've shown you in previous charts that there are jurisdictions that have historical precedents of taking control of other people's gold. For that reason, we felt that it was very important for us when we launched this product to hold every single bar of gold in Singapore itself. You can also buy gold miners, and there your risk exposure is very different from an actual gold bar. Your risk exposure to gold miners is the risk that the company can profitably extract gold from the ground at minimal cost and sell it to the open market for maximum profit. That's a very different set of risks from actually owning a gold bar. And so for that reason, what we thought would make sense to anybody that was looking to get exposure to gold prices, we had to check all of these boxes to approximate something closer to an ideal solution. And that is why we designed this product. Lion Global Singapore Physical Gold Fund invests only in physical gold. We hold fully allocated gold bars, and we can go into a little bit of detail in the following slides. We do not buy derivatives. We're not taking exposure to gold through other people's ETFs. We're not buying futures, just solid gold, of which 100% of the gold bars is vaulted in Singapore, and you can go into why Singapore makes sense, and securely vaulted with our custodian, Standard Chartered Bank, which has leased a space in the Freeport in Singapore near Changi Airport, which has maximum security and a whole lot of security measures that I can get into in the following slides. And we fully insure every single gold bar that is held in the fund. Of course, we can't insure for everything. There are certain things no insurer on earth is going to cover for, but we can certainly insure for the risk of loss, theft, or damages. And we may ensure that there is at least an annual audit to inspect, to make sure that every bar of gold that we have on record matches every bar of gold that sits in that vault at the Freeport. And of course, we want it to be liquid and accessible, so investors can right size their gold exposure for their portfolios. Whether it is a big portfolio or a small portfolio, we wanted to give people the flexibility to size their positions accordingly. This is a quick comparison of how we compare versus other gold instruments. And well, look, we're all buying the same gold, right? Gold is gold across the world. The difference that we really want to highlight is that, number one, you know exactly where the gold is. All of it is in Singapore. And number two, we do fully insure all the allocated gold. And this was something interesting to us. If you dig into the prospectuses and the legal documentation of all the other gold funds and ETFs, it will not really state that the gold, the physical gold that is held by the fund, is fully insured. Whereas we went to the next step to say explicitly in our prospectus that we fully insure every single gold bar, allocated gold bar inside the fund's property. And this is an example of what kind of gold bars you'll be buying. Now, we're not buying the small 1 kilo bars that you can get from UOB and other gold dealers across the world. What we are buying are large bars, and these bars are approximately 12.44 kilograms. They are known as the 400 ounce bars. For short, people just call it large bars. And all of these bars are sourced from LBMA accredited refineries. LBMA stands for the London Bullion Market Association. It is the global standard setter for gold trading across the world. So they define standards of who is a qualified refiner, who can hold the gold, who are trusted custodians, who can measure and weigh the gold in order to determine that this gold is of what weighs what it says it weighs. And even the dimensions of the gold bar have to fit certain predetermined specifications, otherwise it is not investment grade gold as defined by the LBMA. It has to come with certain markings. The serial number of the gold bar, which is displayed here, like the N, is basically an NRIC number for gold bar, the refiner that it came from, the year and month of its make, and something called the assay, the purity of the gold, whether it is 99.99% gold or 99.5% gold. There is a tolerance, there is a minimum fineness that any gold bar that is accredited by the LBMA must meet, and that is 99.5 or higher. We deliberately chose Singapore, and one of these things I'll highlight is that Lion Global is a Singapore-based company. We are part of the Singapore Inc. story, owned by OCBC, one of the three financial pillars in Singapore, and we worked with Standard Chartered Bank. Another part of the Singapore Inc. story is Standard Chartered Bank, in case anybody doesn't know, of course, is owned by Temasek, has an ownership of a bank, of the SCB. And so we wanted everything to be really structured using Singapore source partners. Singapore itself meets a lot of the requirements that we have for being deemed a safe jurisdiction to hold your gold. First is the low risk of natural disasters. Second is a strong domestic rule of law. Third is stable foreign relations. Now, there are a lot of jurisdictions outside in Asia not called China, and the traditional thinking has been, when you're looking for a place to store your gold, you wanted a jurisdiction that was able to defend itself in the event of a war. And for that reason, traditionally, it has been either the UK, for historical reasons, and the US, the world's superpower still, and China, which is the other superpower in the world. And outside of these couple of jurisdictions, if you look across Asia, there's only really a few names that people would consider. And Japan, well, unfortunately, has something called earthquakes. South Korea has a neighbor called North Korea, and South Korea also has a series of presidents that sometimes end up in jail. Taiwan has typhoons and earthquakes as well, and Taiwan unfortunately has a certain degree of, let's say, geopolitical tensions due for historical reasons. So for all these reasons, we think Singapore and Hong Kong do come up ahead. And because Hong Kong occasionally has a thing called typhoon alert that makes it difficult to go to work, we think Singapore edges it out by smallest of margins to be a very sensible jurisdiction to vault and hold your gold. And if you want to have a brand new hobby of watching gold move from Changi Airport into the vault, you can look at this picture right here. And what this shows is the actual location of the free port, right? It is in this yellow box here. And you'll notice right next to it is a little place that we might be familiar with called Changi Airport. And the reason we selected this particular vault was that if we have to import gold from overseas for whatever reason, that gold lands in Changi Airport and straight away in about 15 minutes or so travels along this road called Perimeter Road. It's called Perimeter Road because it is the perimeter of Changi Airport, and gets straight into the vault with very minimal logistical risk. Within the vault itself, there is a 100-meter long strip of road where there is nothing except one way in, and there's a big gate here. So in case somebody tries to break into the vault, they have 100 meters to cross and get shot full of bullets by the armed guards there, and the CCTV camera will record them being shot full of bullets, and then so that people can play it back and laugh at them on day 2. Within the vault itself, it is highly secure with scanners. Before you go in, there has to be a scan. They have to make sure that you're not bringing any material in that is not allowed to be brought in, and there's only one way out. So once again, when you go out, you have to make sure that no material that you're not allowed to bring out is brought out. The security guards there are all armed, and there's always at least one person to 5 visitors that accompanies everyone around the vault. When we were doing due diligence on this vault, we had the opportunity to travel and see the vault itself. And at all times we are accompanied by an employee, and that employee showed us a series of pipes that ran throughout the inside of the vault, and the employee told us that, there is a clause in my employment contract that says that in the event of a fire, the vault will be flushed with nitrogen gas, and none of the employees can breathe nitrogen gas, and no human known to man can breathe nitrogen gas. So in short, the employee told us that there is a clause in his contract that says, if I die, I die. And that's how seriously they take the security of the vault, because the vault doesn't just hold precious metals. The vault also holds precious artworks. The vault holds vintage automobiles. The vault holds antique paintings. High value items are all stored within this vault. And in the event of a fire that could potentially damage any of these very fragile high value items, they can't take that risk, so they flush it full of nitrogen, and then somebody has to pull the bodies of anybody trapped in the vault out the day after. If this level of security is not sufficient, don't worry. There are further levels of security put in place. There is ongoing monitoring at the governance level by 3 ministries, and this MES, Ministry of Home Affairs, which governs the import and export of commodities like gold, and the Ministry of Finance. It also operationally supervised by 3 entities known as the Singapore Police Force, Singapore Customs, and the Civil Aviation Authority of Singapore. So the level of security that I'm trying to impress upon you, it'll be difficult for an individual to replicate this level of security without paying a lot. And we can talk about why this makes it a lot of security, including the insurance, that goes into protecting the gold that is held in this fund. And let's talk a little bit about the insurance policies that are present in this fund. So number one, I've said that every single bar of gold is insured. This is true. If you look at gold in the allocated account, basically gold held in physical gold bars, the fund at all times seeks to hold at least 95% of its assets in physical gold. We would like that to be higher, and I did a quick check. I think today we are running close to 98+% in physical gold bars. And every one of these gold bars is fully insured by a policy that has been procured by the custodian, Standard Chartered Bank, that covers theft, loss and damages in custody and in transit. So in case on the way out of the airport the gold bar somehow drops out of the truck and lands on the floor and get an tear, and the tear makes the gold bar no longer fit the dimensions that are prescribed by LBMA, don't worry, the insurance policy will cover it. The gold will be made whole, and all that is covered by the fund. There is also something called an unallocated account, because a 400 ounce bar of gold is approximately 2 million Sing dollars. There will be times where we don't have enough assets to make up a full bar. So what do? We will hold it in an unallocated gold account, which is basically a gold credit account. And what that allows us to do is to still participate in the price of gold, so we're not holding cash or holding very, very minimal cash. And this unallocated account is also insured up to the limit of indemnity under the general insurance policy of the custodian. Basically what that means is that we have to hold as little of this as possible, and we have been allowed by the MAS to hold up to 5%. Now in practice this is usually lower. In fact, like I said, we're holding more than 98% in allocated gold, so less than 2% in unallocated gold. And the point I want to impress is that all the gold bars are fully insured. Whatever is not able to be held in gold bars is also insured by the general insurance of the custodian, so the gold is insured. And once again, that makes us slightly different compared to the other funds that do hold physical gold. And what about the cost? Well, if we look at what is available in the market, you do see we will talk about a management fee of 0.4%. There will also be expenses that I cannot state here because we don't have a full year of track record yet, but we estimate this will run at about 0.15%. So total, you're paying 0.55% over 1 year. What that translates to is that if you buy $100 worth of gold, the cost of buying the gold, the cost of custodizing the gold, the cost of securing the gold, the cost of insuring the gold will come up to 55 cents a year. So if you compare that to what is available out there, look, if you're buying gold yourself and you want to safekeep it, you can buy a safe deposit box. That doesn't come with insurance, by the way. If you hold it with a bank, the bank will make sure that you have a safe deposit box, but the bank will not be liable for the contents in the box. You can also go to a vault, let's say silver bullion for instance. They do provide insurance, but I understand that insurance can be expensive or affordable depending on how much gold you're vaulting with them. You can also get a box with Cisco, but that also comes with its own set of costs. So the long and short of it is that there's no simple way for investors to decide, regardless of how much they want to start with, whether we can start with as little as $1,000 through a fund and still get that level of security and custodianship that the fund has put together. So for these reasons, we think that if you're looking to invest in a trusted asset like gold, to consider a trusted home like Singapore, and do consider a trustworthy partner like Lion Global Investors. And for that reason, we put together the Lion Global Singapore Physical Gold Fund. I'll stop my prepared presentation here. I'm happy to take any questions that you might have in the chat box.
Thank you, Ni. Yeah, now it's a Q&A time. Feel free to type your questions in the chat box. Before that, I just want to share with you something as well. This is this is why my daughter showed me a couple of days ago. You know that Blackpink. How many of you watch Blackpink concert this couple of days? And you know, um, Singaporeans are very interesting because I've conducted many seminars and webinars, and the Singaporeans are always the quiet type. And even for Blackpink concert. So my daughter, you can see my screen, right? So my daughter shared with me this cute comment from the TikTok, right? People who are watching the Blackpink concert actually are talking about CPF, MediSave, and the government, right? This is so Singaporean, right? And my point here is that, since you are here today and you had the rare opportunity to talk to the manager directly from Lion Global, do take the opportunity, right? Get all your answers, get all your questions answered, right? So, yeah, I'm happy to see now you all start to be active. Yeah, put the emoji or thank you. Okay, first of all, let's really put the thank you into the chat box. Thank Nicholas to give us such an in-detailed presentation. I'm very interested into the security vault stories that he shared. Yeah, okay, it's really interesting and insightful. Okay, so I saw some
Okay.
questions coming in. Nick, maybe
Yep.
field
Yeah.
the question.
So I mean, thanks everyone for giving me the opportunity to share. We're very grateful for this chance to talk a little bit more. I'll go through questions one by one. The difference between the different classes. Let me put up the slide on the different classes once more, just so that we can all look at the same thing. Um, Here we go.
So maybe, Nicholas, I will ask the question, then you answer. Lah.
Sure, sure.
Yeah, okay?
Okay.
Yeah.
So maybe so I'll just start with the different share classes. So there's three share classes that we want to be um, looking into. One is the Sing Dollar share class, and that is a share class that takes your Sing dollars and then directly translates it into US dollars and buys the gold. The second is the US dollar share class, where if you're investing with US dollars, you want to be buying that share class. And the third is your Sing dollar hedge share class, where if you are concerned about the US dollar depreciating against Sing dollar, then you would want to consider that share class. So those are the differences in the share class. We also have a Sing Life class, which is denominated in Sing dollar, and that class is exclusive to the Sing Life group of companies. So I believe that conversation Sing Life would have. So these are the classes that are currently available to public. So the difference is really down to the currency exposure and the currency that you're buying with. Yep. I remember one about CPF and SRS. Currently is only cash, not currently enabled for CPF or SRS subscription. Ivan,
Yeah,
should I
so
take the one about fees?
yeah, go ahead.
Okay, so the fees are basically the management fees as well as the custodian expenses, which, as I mentioned, comes up to around 0.15%. So the total operating fees is 0.55%. Now, I will highlight that in the prospectus and all the offering materials, it does state up to 2% preliminary charge. This is something that falls outside of the fund, and depending who you choose to transact with, that number will vary. So we can't really, as a fund manager, we can't really say too much there. But the running cost of the fund is about 0.55% all in. Yeah.
Yeah, to answer Alpha's question, how do you buy and sell the fund and who is managing? So basically, you can buy the fund through your financial advisor. If you're my client, you can buy the fund through me. And we use different platforms to transact the fund. For example, there's a Sing Life, which is uh, a Navigator Grow platform. We can use that. If you have an iFast platform with us, we can also use iFast. It's also on Philips Securities, right?
Yes.
Yeah, yeah.
Yeah.
So let's say if your account is with us under the Philippines Securities, basically, the fund should be available in most of the platforms that you use. Then you can either talk to me or talk to your own financial advisors.
Yeah. Maybe I can share a bit about what actually happens on a day-to-day basis when we receive the monies, just to give people a little bit of a inside view on what actually happens. So let's say we receive $1 million today, right? Set aside the currency of it for now. Now, gold is always denominated in US dollars. We'll take whatever monies we have, convert it to US dollars, and then we'll purchase as much as possible, as many of these 400 ounce large bars as possible, and the remainder of it we'll put into this unallocated gold account. What this means is that once we've made that purchase, these monies will then will move with the gold price. What is the gold price that we track? Is it spot gold? It is not spot gold. It is what the industry calls LBMA, benchmark fixing price. The difference between spot gold and the LBMA benchmark fixing price is that spot gold includes the impact on prices of derivatives, so futures contracts, any sort of gold derivatives, swaps, etc. All this gets factored into the spot price, and spot price of course updates every 15 seconds or so. The LBMA benchmark fixing price only covers physically traded gold. So the price of gold that we wanted to get exposure to, we didn't want it to be factor in the derivatives, the impact of gold derivatives. So it's purely just physical gold bars being traded around the world, and that is the price that we will use as our benchmark, and that's the price that will determine the value of the gold. Now, both of them are very, very close. The difference is that spot gold is determined by a whole lot more market participants, and LBMA's price is determined by the LBMA through their own auction process across all the bullion banks in the world that trade physical gold. Yep. So it is a small, very technical detail, but worth highlighting in case people get question why doesn't it track the spot price, and how do you secure it once a day. Okay, so that's how the investment works. So once your money is invested, those assets will then appreciate or depreciate along with the gold price. Yes.
Okay, so there's a question from AL. What is the minimum amount? I think another person
yeah.
asked about the currency as well.
Yes. So the minimum amount can start as little as 1,000 US or 1,000 Sing. So very accessible for most investors. And the denomination. Okay, so the fund's base currency is always US dollar because the asset itself is denominated in US dollars. But if your base currency, the invested currency, is Sing dollars, then it makes more sense for you to buy the Sing dollar because the conversion is taken care of by the fund at the fund's institutional conversion rate, which is likely going to be more efficient than an individual's if you go to wherever it is you do your FX conversion. Yeah. So let us take care of that. The key thing is to pick the right share class currency that matches your investment base currency. Yeah.
Yeah, so there's another question follow-up regarding the hedging. So what is your view on hedged or unhedged Sing dollar share class?
Yeah, we would say that the hedge is really there for investors who have a very strong view that the dollar is going to decline significantly against the Sing dollar. In reality, because the Sing dollar is actually a managed currency, the likelihood of a sudden devaluation of the US dollar versus the Sing is quite unlikely. However, because we have investors who do see that as a risk, we have created this share class for them. Yeah, but for the average investor, well, look, if gold appreciates against the US dollar, gold is going to appreciate against every other currency, right? And because the Sing dollar does have US dollar as part of its basket of currencies, of course the ratio is unknown to us. That's a state secret. It is likely that gold will also appreciate against the Sing dollar. So for that reason, it really depends on what is your starting investment currency. If you're starting with US dollar, then you buy a US dollar share class. If you're starting with Sing dollars, then you can buy the Sing dollar share class. Yeah. I thought there was an interesting question about whether there's a chance of a DPEG, where in other words, whether there's a chance that the fund's price will not track the gold price. And if you guys look at the 28th of November and you Google 28th of November, something interesting happened. The Chicago Mercantile Exchange, the CME, actually went down for a couple of hours on the day that we were supposed to be buying gold. Created a little bit of concern, but if you guys look into it a little bit deeper, like I said, the LBMA gold fixing price is determined by the LBMA auction process. It is not determined by spot gold price. And even in that stress test, of course it was a stress test because the world's trades could not be cleared on the CME. And the CME is such an important exchange, not just for the US trades, but for trades globally. A lot of these prices, the spreads went wide because there was no price discovery. And so there was a distortion in the prices. Thankfully, everything was resolved, and prices were able to be quoted normally thereafter. But the price that we secured was pretty much the LBMA benchmark price. So even under stress conditions, some of these questions sometimes we can only answer when we've been tested by the market. Turns out we were tested on the very first day, and we actually came across and were still able to track the gold price even under very trying circumstances. And so for that reason, I think that the deviation that the fund price will have versus the gold price is expected to be the expenses, 0.55% per annum, and anything else will be pretty much on the margin. It will be marginal, subject to the bid-ask spread of the actual gold prices itself, and that is determined by the market every single day, and we can't really control that. So that's how we've kind of weathered periods where one might say it was more difficult to peg against gold than normal.
So
Yeah.
there are questions about the prelim charge and also about the transaction charges. So maybe I'll just answer this question. So the prelim charge is a maximum charge that your financial advisors normally in the market they charge, and but this is depends on the advisor. So advisors like me, that I do not charge any preliminary charges for my clients. We always waive all the sale charges for our clients to save their costs. So there's no transactions to buy, there's no transaction to sell also. Yeah.
Mm.
And there's another question about whether Moon and Tiger, is it available there?
We are working on it. I would say for now that we are still working on it.
Okay. Okay.
Okay, maybe I also want to add a little bit more detail into the transactional charges. So, Ivan, you've mentioned correctly that assuming that advisor charges zero transaction charge, investors can buy and sell units at zero transaction fees. But there's also the transaction of the gold, where the fund manager takes money in and has to buy and sell the actual gold. So the transaction charge there of actually trading the physical gold is captured under that 0.55% per annum, right? So it is all accounted for. So investors, and basically we will be transacting an institutional spread, so it will typically be tighter than whatever investors would pay if they were to buy the gold themselves. Yeah, so all this is included within the 0.55%.
So for those people who do not understand how funds works, the fund charges will be reflected in the NAV of the fund. So when you see the fund price, it's already net of all the charges, right? There's one question about conservative investor. Alpha asked that for conservative investor, what is your recommendation?
I guess for conservative investor, the recommendation wouldn't exactly be what share class to buy. It would be how much of your portfolio do you think it makes sense to allocate to, and then from there you can figure out which share class makes the most sense for your portfolio. So let's create a hypothetical scenario where you have 100 Sing dollars and you wanted to figure out how much of that to allocate. As little as 5% can make a difference to a portfolio. I think the studies by World Gold Council and a lot of other folks have shown that just having 5% of your portfolio can increase your return, reduce your risk marginally. We've seen people, more intelligent people than me, say as high as 25 or 30% makes sense. But yeah, just a little bit, 5 to 10% can already improve the risk return metric. So if it's first time that you're investing in gold and you're not accustomed to the volatility of it, it would probably make sense for reasons of, how shall we say, reasons of behavior to start with a small amount. If I go suddenly 25% of your allocation into gold and suddenly gold price swings, which it does swing, it will swing. And for that reason, suddenly you reduce your allocation because you can't, you're not comfortable with it at precisely the wrong time. Then that kind of undoes all the good that gold could have done for your portfolio. So if you're new to investing in gold, then start with maybe a 5% allocation, and if you get comfortable with that, then you can slowly decide how much you want to increase that by. Like I said, if you're starting with Sing dollars, then the Sing dollar share class is there for you. If you're starting with US dollar, then the US dollar share classes are there for you.
Yeah, maybe just add on. Exactly, I totally agree with Nicholas' opinion about that. You do not buy gold because you are conservative. We already established at the very beginning, gold is volatile. It's not a safe asset per se. It's a hedging asset. So they hedge your other part of your portfolio risk, but it itself is not conservative investments to begin with. Yeah.
Okay.
Uh,
CDB account. It's not held within your CDB account. So yeah, it's a unit trust at the moment.
So the structure of a unit trust is that the structure unit trust is held by the custodians. CDP, you only held your individual Singapore stocks.
Yes.
They still have a question about are you all buying physical gold?
Yep.
Uh,
So this goes actually dovetails nicely into the last sentence you mentioned about the structure of unit trust. So when you buy into um, the fund manager, in this case Lion Global itself, does not actually hold the gold. The gold is held by the custodian, Standard Chartered Bank, and is standard industry practice that for reasons of independence, the custodian and the fund manager can never be the same entity, right? So you will probably never see a LGI fund where the gold is custodized by a related entity, let's say OCBC for whatever reason, right? So it is for this reason there has to be a certain independence of the two entities. So what happens is that the units are created or destroyed depending on how many people are buying and selling the units, and for that reason, every unit represents a fractional share of the total assets of the fund. So if you're buying $10, you said 10 units, right? And outstanding is 100 units that have been created. You hold approximately a 10% ownership of the total assets within the fund, right? Roughly speaking. Yeah. So that's basically how the structure of fund works.
okay, all excellent questions. I think due to time constraint, let's move on to the next segment first. And we can, for those people who have question later, we need to do the Kahoot, and also that we need to do the Kahoot before, if you have question, you can continue to ask later. Okay, so for those people, I saw all of you have a lot of questions. If you are interested in the fund, you feel that this is something that you want to allocate some, and or you think that you want to consult me as a advisor to look at your portfolio, how the fund fit into your portfolio, do scan this QR code and and submit your inquiry lah. So we can follow up with you regarding the fund. Okay, so I just give you a second to scan the QR code before I launch the Kahoot sessions. Okay, I will also type the QR code into the chat box. Okay. Actually, Jason's question is very interesting because also that I have a Kahoot question about that as well. Yeah, because Lion Global does not own the goal. As they mentioned, they are the fund manager. So they are managing the goal on your behalf, right? They do not own the goal. Let me see whether any missing questions at this moment. Uh, Feedback. Yeah, all excellent questions tonight. Hey, prospectus, I think we can
Yep,
easily.
you can get it on the website. It's also available on all the platforms.
Yeah, just
Yeah.
Google Lion Global Physical Gold Fund. You should be easily locate the prospectus.
Yep. Yep. So we've incepted the fund on 1st December, most of the share class on 1st December. So what that means is that the price will now start to track the gold price movements.
Can you also mention about the cutoff time for the what time is it that you set the gold price?
So the gold price that we will participate in is the LBMA benchmark fixing price, which is fixed every day at 10:30 a.m. London time, which translates to right now 6:30 p.m. Singapore time. So at 6:30, you look at the price of gold. That's roughly the price that we will secure. Yeah. So yes, to Jason's point, it means that once you buy the fund, if gold price rises, you will see a corresponding rise in the fund's price, and if gold price falls, you will see a corresponding decline in the fund's price.
So basically, it's same as you are trading a stock lah. So if you buy the stock, if the stock price go up, then the fund price will correspondingly going up. And it's very transparent because all the data is a public data. You can check it anytime. Okay, so now it's our Kahoot time. Uh, okay, so we have this golden travel utensils sponsored by Lion Global for today's event. And it's not real gold, but it's a golden. Okay, see, look at the screen of Nicholas. If you can see his video, he's showing the real one. So for the top three participants, you are able to claim this gold spoons. Okay, yeah. So I will share the screen for the Kahoot. Okay. All of you see the screen. Yes, into the chat box. Okay, Jason asked what site to see the gold price. Basically, you can see from all the, if you can see the unit trust website, all the places that you see all the fund prices, then they will publish the price daily. Yeah. Okay, so for those people who are participating in the game, please scan the QR code on the screen. Are you hearing the sound? I think I forgot to share the sound. You can hear the music. Type music into the chat box. Nicholas, you can hear the music. And okay, that's great. Thank you. We'll just give 10 seconds for the people to join. Still people joining now. Okay, anybody else last minute? If you need time, tap into the chat box. Otherwise, we will start. I still got people joining. Okay, I will start. 5, 4, 3, 2, 1, start. Which of the following is true about gold? Okay, almost everybody got it correct. There's one person feel that gold can track inflation perfectly. This is not real. Okay, PK is leading. Next one. Which gold option require you to handle storage and the insurance? Okay, gold bullion funds do not require you to handle the storage and insurance. The fund manager will handle it. Okay, so it's a physical gold and the gold bar and the coins. Well done. Easy peasy. Next one. What's the main purpose of adding gold into a portfolio? Okay, everybody got it correct. Okay, next one. Where is the goal of the Lion Global Singapore Physical Gold Fund store? Okay, there's one person. Okay, it's in the vault in Singapore. Okay, there's one person feel that you all need to diversify the multiple vaults globally. Okay, so see, PK is still leading. Angelo and Roddy. Okay, the fifth question. What is correct about Lion Global Singapore Physical Gold Fund? Okay, invest fully in physical gold stored entirely in Singapore. Okay, it doesn't treat gold future and derivative. It does not sell physical gold bar to you. Okay, last question. I mean, WP is leading, Roddy second, ALE third. What type of investor is this fund suitable for? Okay, so some people choose is for the investor who want the gold price exposure without holding physical gold fund, receive physical gold. So you buy a fund to get exposure for the gold. Some people choose you want to leverage gold exposure. Maybe there's a misunderstanding about the leverage. Leverage here means that you leverage you multiply your exposure to gold. Okay. So maybe I think you understand, maybe just a misunderstanding about the word average. Okay, so let's see who is the winner. Okay, the third one is ALD. Second is Roddy. Okay, WP is the first one. Congratulations, everybody. Can you put the congratulations or thumbs up into the chat box, please? So for those people who have win, please do drop me an email. I will send you the details so you can collect the thing from my office. Okay. My office is at the Paya Lebar Simple Center, which is very convenient place. Okay. Any other questions before we wrap up today's event? Oh, Roddy is Rudy. Okay, congratulations. Okay, well done, everybody. Okay, let me close this. Any questions? Okay. How do you feel about today's webinar? Is it something you learned something today? If you find you learned something today, type value uh, into the chat box. Okay. Okay. Good value. Thank you, everybody. Can you type the key takeaway lah, of today's event that we have learned in the this webinar? Because it's always a reflection. Otherwise, a lot of time you just attend a webinar, you go home, you don't do anything, you forget about it, right? So type the one thing that the most important thing you can take away from today's webinar. Okay. So there's still some questions coming in.
Yeah.
Yeah,
Maybe while people are typing in their key takeaways, so the difference between SGD and SGD hedge, SGD will give you currency movements, right? So SGD exposes you to the risk of the US dollar moving against the Sing dollar. SGD hedged means that your SGD investment will move with the US dollar value of gold. So you do not experience that currency fluctuation. Yeah, so that's the difference between SGD and SGD hedged.
yeah. Maybe you also want to mention about there's some costs involved lah for hedging.
Yeah. Okay, so the cost involved in SGD hedging, so that cost is basically the spread between the US rate and the Sing rate, right? So currently the cost of hedging is around 2.5% cost. So in other words, the SGD hedge returns will be 2.5% lower than your actual US dollar returns, and that's just the cost of hedging. This cost is not incurred by the fund manager, is not incurred by the custodian, it is just market prices. So when that spread between the US rate and the Sing rate narrows, then the cost of hedging will also tighten. Right, so this is entirely market dependent, and that's just the cost of hedging. Now, then why would people hedge? Because if they anticipate that the US dollar is going to decline much more than 2.5%, then it makes a lot of sense to incur that cost, because it will protect you from all the downside that the dollar could decline against the Sing. So that's why hedging is important to some investors.
Yeah, Casey, very good questions. Yeah, this is the thing I want to highlight to you all. I think some people this year, a lot of people also buy fixed income instruments, which is Sing dollar hedge, but they are not aware of the hedging costs, which eat into most of their fixed income returns. So actually, they earn nothing from fixed income bonds. So you need to be aware about all these difference about financial instruments. It's good that now you have more informed decisions. Okay. So just look at the screen. If you are interested in the fund, you want to know more about how I can help you to manage your investment portfolios, do scan the QR code. And also, if you're interested in joining our FRM communities, we do have a sale now. So Black Friday still here. So do send us a note So you can drop me an email. You should have my email, and so I can reach out. Our staff will reach out to you also. Okay. I think that's one more last question before we really wrap up.
Oh, I
Uh,
suppose it's an interesting question to talk
yeah,
about.
yeah,
So if you go to pawn shop and buy the gold, number one, the gold that you buy at the pawn shops are not may not be LBMA gold, right? You go to gold buy a pawn shop. Some of it could be jewelry, some of it could be rings, some of it could be little ingots, and none of this meets the requirements for investment grade gold, right, or LBMA gold. So while yes, you are buying and selling gold, the markup that the pawn shop charges and the markdown, when the pawn shop buys, is very very different from what the very transparent costs of the fund would be stated as lah.
yeah. So they basically go back to my earlier discussion about the transaction costs and also the liquidities, and also about how genuine is a gold. It's very hard for a layman to verify lah, the quality of the gold as well, right? Okay. Yeah. So if I think we just nice, we finish our 2 hour event, which is very successful today. Thank you so much for all your questions. Uh,
Oh,
yes, you if you buy from the bank.
yeah, if the choice is between a bank and a pawn shop, then yes, a bank is probably going to be a little bit more tightly regulated by all the regulators. And I've already shared a little bit about why it's more efficient through the fund, so I won't belabor that point.
Mm, yeah. Okay. So let's put our hand together. Really thank you, Nicholas, for today's sharing. Very insightful. I'm sure all of us learned a lot of things today. Really appreciate all of your participations, all of you attending at this hour, ask the wonderful questions. Okay, so put thank you into the chat box, and we can wrap it up for tonight.
All right,
Okay.
thank you everybody. Thank you Ivan,
Thank
and thank
you.
you everyone for your
Thank
time. Good luck out there. Thank you.
you, Raymond. Good luck, everybody. Okay. Have a good night. Bye
All
bye.
right, good night. Bye bye.
Recording stopped.